All right, guys, before we get started in this episode, I'm going to talk all about what my plan is. We're going to talk about NFTs. We're going to talk about crypto. We're going to talk about good news. We're going to talk about bad news. We're going to cover all that in this episode, so I'd appreciate if you could stay to the end. But let me start by saying, guys, this is not financial advice. I am not a financial advisor. I am not trying to influence you to sell, to buy, to do anything, guys. I am just covering what I'm doing and talking about what's going on in the news, guys, because if you're not up to date on what is happening with this FTX story and you're invested in crypto in any kind of way, do yourself a favor and do your own research and get educated on this. Also, another thing, guys, I'm not going to talk too much about it. What self-custody is, the difference between centralized exchanges and decentralized exchanges. Do yourself a favor, go and do your own research and understand what all this terminology means and how it affects the crypto markets. Now, let's go ahead and let's get started, guys. I decided, once this FTX stuff happened, and because of the way our media is covering it, and because I'm seeing in the future of what the dominoes that are going to be falling because of all the institutions that had exposure to FTX, between FTX loaning them money, and also because of our mainstream media and in the SEC's ability to just look the other way. Very, very disturbing stuff, guys. So let's head over to CoinMarketCap, and we're going to talk about exactly what my plan is. So I sold my Bitcoin, I sold my Ethereum, I sold my Solana, I sold my Polygon Matic. Guys, Polygon Matic's down 3%. It's down a little bit more since I've sold it. Ethereum down 3%, a little bit more. I sold a little bit higher than this. But, guys, I fully expect for us to go lower. I fully expect us to go lower, and I'm going to show you why in this video. Now, what I plan on doing, guys, until the bull market starts back up, I'm not gonna buy coins that's probably outside the CoinMarketCap top 50 coins because, frankly, I don't feel safe in anything right now, guys. I don't feel safe in centralized exchanges. This situation was unprecedented, guys, and really, again, this is not an indictment on crypto. This is not an indictment on Bitcoin. If anything, this strengthens the argument on why we need Bitcoin, why we need decentralized assets. And for those of you calling for regulation into crypto, guys, the people that implemented what happened with FTX, they were criminals. No regulation was going to stop them because they were in bed with the regulators. Do your own research into that. Do your own research on the ties of Sam Bankman-Fried and FTX to the SEC and our federal government. It's disturbing. And look, guys, it doesn't matter what your political party is. This is so much bigger than political party. But let's get back into it, guys. So obviously, we're in the crypto winter. Even Elon Musk has said that Bitcoin is going to make it, but it's going to be a long winter. That was Elon Musk's words. Look it up for yourself. Now, what I plan on doing is selling. When I think we've capitulated, when I think we've hit a bottom, I could see Bitcoin's bottom being anywhere around 10 to 12,000. Now, let's go back to CoinMarketCap because I believe that when Bitcoin hits its bottom, all the alts are going to fall with it. Now, some of these alts will, randomly prop up due to different news stories and whatnot. But the main alts are most cryptos follow Bitcoin. Most cryptos follow Bitcoin. So now I'm going to use the money that I sold to reaccumulate Bitcoin, obviously, hopefully around the bottom. Guys, if I buy it at 13,000 and it goes to 10,000, the lower it goes, the higher it's going to come back up, guys, because large institutions are watching. And trust me, I got all the information on that toward the end of this video, so you're definitely going to want to stick around. Now, so when I reacquire Bitcoin, so I'm going to come out. I'm going to come out of this whole dilemma, this whole FTX saga. I'm going to come out of this with more Bitcoin than when I started with, right? Then what I'm going to do, once we re-enter that bull market, that's when it's going to get spicy. That's when it's going to get fun. Because when we re-enter the bull market, that's when I'm going to start going after these low-cap gems. And I'll do videos covering everything I'm going after, guys. Guys, you're going to miss. I'm going to miss. This all depends on what your risk tolerance is. I don't have kids. I'm not married. And I live in my mom's garage. So I have a different risk tolerance than maybe you do. So again, guys, this is not financial advice, guys. Do what you got to do. Now, let's talk NFTs. Let's talk NFTs because, as y'all know, I do a lot of NFT content on this channel. I am, if anything, guys, I am more bullish on NFTs than I have ever been. So let's head over, guys. This is the platforms I use to buy NFTs. OpenSea. This is, Ethereum, but they also have Polygon Matic. and Solana NFTs you can also buy on here. And I use jpeg.store. This is for Cardano NFTs. I have an extensive portfolio of Ethereum NFTs, Cardano NFTs. I'm going to buy some Polygon Matic NFTs. I have Solana NFTs. I have a lot of metaverse investments. Understand something, guys. Metaverse, NFTs, everything I just talked about are the most speculative and the most risky assets. Now, granted, if you're able to pick the right ones, you can create generational wealth. And if you don't believe that, just look at what happened with Bored Ape Yacht Club. Look at what happened with CryptoPunks. Everything is going this direction. Whether you like it or not, whether you think the metaverse is stupid or cool, we're going to it. The fourth industrial revolution. That's what the World Economic Forum is calling this. Klaus Schwab and the World Economic Forum have called this the fourth industrial revolution. China has right now, they're working on like theme parks, virtual reality theme parks where you can even, the sense of smell even happens. So all this is happening behind the scenes, guys. Do your own research into that. Now, let's get into some bearish news. Guys, this is very complicated stuff, guys. These assets are very complicated stuff because digital assets are changing the way the world is run. And believe me, guys, whether it's the United States government, the Chinese government, the Russian government, they all hold these assets. Google how much Bitcoin and Ethereum the Russian government owns. Google how much Bitcoin and Ethereum the Chinese government owns. Google how much Bitcoin and Ethereum the United States government owns. They own a ton. Now, what you need to ask yourself is, if the United States says, hey, we're going to ban crypto, we're going to ban these assets permanently, do you think that China and Russia are going to get rid of billions of dollars of digital assets? No, because why wouldn't they want to just be an economic superpower? So we're all kind of playing this same game where our governments are saying one thing, but they're doing something else. They don't want you to have these assets. I think that's pretty clear by now. So let's go to the next story, guys, because this is this kind of stuff that worries me. And this is from CNBC. Credit card debt in the U.S. hits all-time high of $930 billion. How to tackle yours with a balance transfer. So, guys, we're at an all-time high for United States citizen credit card debt. Guys, Thanksgiving Day price shock. Guys, Thanksgiving dinner price up 26% from last year. 2 frozen pies. 14-ounce bag of stuffing up 69% from last year. A Thanksgiving day, a 16-pound turkey up 21% from last year, guys. This is inflation. And now, what you have to understand, though, guys, it's not that the cost of the stuffing or the turkey has dramatically increased that much. No, that's not what it is. It's that our money has devalued. And what we are seeing through inflation is currencies being devalued all over the world. So inflation is not just an American thing. Inflation is not just a poor person thing. Inflation and hyperinflation are happening due to currency debasements all across the world. So what we are exploring is these new digital assets that can be programmed against inflation. And I'm going to get more into that in the rest of this episode. So just kind of bear with me, guys. Check this out, guys. From Yahoo Finance, 37% of real estate agents in the U.S. couldn't afford to pay their rent in October. Another bad sign for the housing market. Here are 3 key takeaways for sellers right now. So as we know, our Fed, in order to combat inflation, our Fed has raised interest rates. By raising interest rates, it is destroying the housing market because people don't want to get loans. People can't afford it. People don't want to pay 8%. And what our Fed has told us that they're not going to stop hiking rates. I think they're going to say they're going to hike rates up until 2024. So don't be surprised if we see a 10% interest rate on homes. Now, I know what you're thinking. That's impossible, Kevin. Well, it's happened before. I don't remember what year, but look it up. We had 10% interest rates for like 10 years in this country before. So, but understand that the inflation that we're seeing, the reason why the house prices are going up so much, again, not because of the money, not because the houses are going up in price. Your money's being devalued. So what smart investors are doing, they're investing in hard assets that combat inflation. Real estate being the number one way. I mean, guys, look at any millionaire you know. Look at any rich person you know. I guarantee you, any rich person you know, probably 90% of them have a real estate portfolio. Or at least a large percentage of them made their money in real estate. So if you're somebody watching this and, you know, you're just working a normal 9-to-5 job, there's nothing wrong with that. There's nothing wrong with working a job. There's nothing wrong with working for the man. That is a dignified thing to do. But if you want more, if you want better, and you want generational wealth, real estate is the quickest and fastest way. Single family real estate is your way out, because just the way the country is designed, real estate traditionally appreciates around 5 to 7% per year. Now, the reason why we've seen so much real estate appreciate so fast over the last 2 years, because our government printed a ton of money, and all the smart people with the low interest rates said, dude, let's go buy a bunch of rental properties. Let's go buy a bunch of real estate, because they're devaluing our money, and that real estate's going to appreciate. So we kind of appreciated too fast in the real estate market the last 2 years, right? I mean, some of you know this. Different areas, houses appreciated like double in 2 years. That's too fast. That's too fast. So I'd imagine that's where you're going to see the pullback. That doesn't mean all real estate's pulling back. That every market is not the same. Every market. So a shotgun house, a 900 square foot house in the French Quarter that's selling for $1 million, yeah, that's going to get hit. A 1-bedroom house in Los Angeles selling for $2 million, yeah, that's going to get hit. But different areas, the pullback on the real estate market, the crash on the real estate market will happen in different areas. Again, guys, what I would advise you to do is find yourself a good real estate agent, find yourself a good mortgage broker, and be ready for the crash, because I firmly believe it is coming, guys. That's my plan. That's my plan. I plan on, you know, and I'll do videos covering that. I plan on buying a lot of real estate, you know, when this crash kind of occurs. But all right, let's go to the next story, guys. So this is from CNBC. Mark Cuban still believes in crypto despite FTX collapse. So guys, you can go read this article, but you know, Mark Cuban is still bullish. Now this is a story that worries me, guys. This is from Bitcoin Magazine. Breaking: the FTX hacker is selling thousands of ETH and buying wrapped Bitcoin. So what we're noticing is that a lot of money off the FTX exchange, like it's almost like they had some type of backdoor, and an exploiter, a hacker, whether it's Sam Bankman-Fried, I don't know who it is, guys. They were able to extract a large amount of Ethereum, and apparently we're hearing reports, on-chain data showing that they're dumping the Ethereum and they're buying wrapped Bitcoin. Now, this could crash the price of Ethereum, you know, because of the dump. And if they're buying Bitcoin, it could be to crash the price of Bitcoin. I do not know. And why are they buying wrapped Bitcoin? I do not know. If you don't know what wrapped Bitcoin is, essentially what wrapped Bitcoin is another blockchain takes the code of Bitcoin and then, you know, wraps their coin around the Bitcoin token so it mimics the Bitcoin price. So again, I don't know too much about it. Do your own research into that. Now, it's just something we're going to have to watch. Check out this tweet, guys. Just in, 120 firms affiliated with FTX are filing for bankruptcy. So again, guys, we're seeing so much exposure from this FTX. All the dominoes are starting to collapse. Now, I know you're probably not too worried about it, because the mainstream media is doing nothing but puff pieces and downplaying the severity of this situation, guys. It is serious, and this is coming from me, guys. You know, this surprised me. This surprised me. And again, I'm still as bullish as I've ever been, you know, but I just see the direction it's going. And I want to be in a position to have, guys, because in a bear market, you need cash. Cash is king, guys. Cash is still king. Understand that. Not for long. But in a bear market, when there's blood in the streets, cash is king, guys. I live right outside of New Orleans, guys, and we were hit by Hurricane Katrina. And you know, one thing I will remember is that all the houses that were flooded, all the house people were moving, people were taking their insurance money and just selling their houses as is, abandoning them. The people that went in and bought all those houses for pennies on a dollar, everybody thought they were crazy. Guess what? Most of them are millionaires now, because now the houses here are selling for like $200,000, $300,000. So again, guys, the bear market's where you make money. When everybody else is scared, that's when you're going to make money. Now, check this out, guys. This tweet: breaking: Russia and China agree to pay for energy and national currencies. Guys, this is big. This is big, because understand the United States dollar is the world reserve currency, and that's because of the petrodollar. We settle large oil transactions in the dollar. So other countries, they want to buy oil, they have to use the U.S. dollar. They have to exchange their currency for the U.S. dollar, which makes the U.S. dollar the de facto the large currency. Now, also, we have the largest economy in the world, so that also plays a part well. And I still do believe that this is the best country in the world. I still do believe that, but we can see the writings on the wall, guys. We can see that our country, for whatever reason, is losing support around the world. And as we see other superpowers who are clearly not aligned with our values, Russia and China, is telling you that we're not gonna transact in the U.S. dollar anymore. They're moving away. Now, we've sanctioned Russia, and we're actually starting to go at China a little bit. But these countries, they're not gonna just be under our thumb. They're going to transact in their own dollar. They're going to transact. China's working on their own. China already has their own central bank digital currency. Russia has billions of dollars of Bitcoin crypto assets. So you guys see where this is going. Check this out, guys. The SEC thought they were gangsta. Then the Bahamian Securities Commission walked into the yard. So apparently the Bahamian Securities Commission instructed FTX to withdraw all funds into their custody. And now they're telling the U.S. bankruptcy courts to go F themselves. So now all the user funds that were stored on FTX, whatever's left of them that hasn't been stolen, are now in the custody of a foreign government. And you're okay with this. Your mainstream media is nothing to see here. They're not even reporting on this. Now, I'm not saying the Bahamian government's going to do something bad. Maybe they're going to give all the money back to the retail. I hope they do. We don't know that. Now, let's go to next week, guys. So this is some tweets Dylan LeClaire put out. This is from The Economist magazine. And what we see here is get ready for a world currency, The Economist magazine. And then now GovCoins, The Economist magazine. GovCoins, the digital currencies that will transform finance. And then The Economist said recently, down the rabbit hole, the promise and perils of decentralized finance. So they're slowly starting to talk about this, guys. Now, for those of you who are not, I guess if you made it this far in the video, you're probably bullish on Bitcoin, but I want to show you something, guys, because it seems that a lot of people, retail especially, and a lot of investors have a very, very narrow mind when it comes to crypto assets and Bitcoin especially. Understand that Bitcoin is so much different than every other crypto. You have Bitcoin that really is its own asset class, and you have all of the cryptocurrencies. And at this point, if a blockchain is not proof of work, I'm probably not investing in it because I now see the dangers of these proof of stake blockchains. So shame on me for not seeing that earlier, but now I understand why proof of work is so important. So I want to show you guys this. Check this out. So this is the Bitcoin returns from 2010 to 2022. So we can see, guys, go Google these returns. So it's hard to argue with this asset class in the long-term returns. What people are looking at is the short-term and judging the asset compared to other assets when, guys, say real estate. Would you take your house and say, is it a good or bad investment based on 1 or 2 years of owning the house, right? Because the house didn't double in 1 year. Okay, well, real estate's a bad investment. No, you have to look at a 10-year or more on a real estate investment to understand if it was a good or bad investment. That's just common sense, guys. So now check this out, guys. Could Hong Kong actually serves as China's crypto proxy? This is interesting, guys, because we've heard China. How many times did we cover this? China's bans crypto. Now, Hong Kong's friendly reorientation toward crypto portends China reasserting itself into the crypto capital markets. Guys, I'm not an expert on China. I'm not an expert on anything. But I've covered on this channel the amount of times China has come out and banned crypto. And now what the data is showing us is that in China's actually uses crypto the most. And now they're wanting to become a hub for cryptocurrency transactions. So what that tells me is that it's not that crypto's bad or China's really banning crypto. China's banning crypto for its citizens. It does not want its citizens to have financial freedom, financial independence. China wants a currency, a central bank digital currency that they can control. They don't want something decentralized out of their control. That's why they kicked all the miners out. Look into that, guys. Look into that. Next story, guys. Check out this tweet. Bitcoin is simple math. So, guys, yeah. So this tweet, I think, really explains what my thesis on Bitcoin is. The U.S. dollar, your money, divided by infinity, because they can print, the Federal Reserve can print as much money, and there's nothing you can do about it. There's nothing the president can do about it. Bitcoin equals your money, 21 million coins. There's only 21 million coins in circulation, guys. Of the 21 million coins in circulation, about 18 million of those coins have already been mined. And, guys, the amount of Bitcoin that's lost forever, people, lost their keys, amount of Bitcoin that's lost forever, so it's becoming more and more scarce. We're seeing more and more adoption. Again, guys, we still don't know who created Bitcoin. That is worrisome to me. But as far as, what makes sound money sound, and what makes what protects money from inflation, Bitcoin solves all those problems, guys. That's why I am so bullish. That's why I'm so bullish. So the lower it goes, the more I'm gonna buy. Now, here's something to really something you really have to think about. Bitcoin Magazine tweeted this. Just in, over 150,000 Bitcoin were taken off exchanges in the last 2 weeks. So this is the Bitcoin balance on exchanges. So all the different exchanges, and guys, it is dwindling. So there's not a lot of Bitcoin on exchange. Now, what that means is that when the exchanges run out of supply, then if a large fund wants to buy Bitcoin, they're going to have to buy from retail, from me and you. Now, why is this Bitcoin coming off exchanges? Well, there's a lot of reasons for that. One, there are investors that are buying the dip, buying the dip. We've seen El Salvador. We'll cover that, buying the dip. Also, too, guys, because of what happened with FTX, and what investors are saying, if the second largest crypto exchange in the world can go under, then that means that, technically, Coinbase could go under, Crypto.com could go under, Kraken could go under, all these different exchanges are at risk of going under. Absolutely, guy. Absolutely. If it's a centralized exchange, to say that there's no counterparty risk is false. Now what users are doing, they're locking up their Bitcoin in cold storage. So again, do your own research, learn about cold storage, learn about, if you want to get a Trezor or Ledger Nano wallet, I have my Amazon affiliate link. So look into that, guys, because self-custody is the future, and you're basically going to become your own bank. And when you self-custody your Bitcoin is now stored on the most secure network in the history of mankind, the most secure computing network in the history of mankind. So that's where I feel safe for my crypto, guys. So what I'm going to do is I'm going to trade these assets. I'm going to buy some Bitcoin. I'm going to sell. When it pumps, I'm going to sell. I'm going to take profits, and I'm storing everything on a Ledger Nano, and I'm going to wait this out. I'm going to wait this out because I don't know how long this is going to go on for. Now, check out this tweet, guys. The $142 billion hedge fund Man Group is launching a crypto hedge fund. Man Group readies crypto hedge fund despite FTX chaos. Of course. We've talked about this before, guys. The big boys are ready. They're chomping at the bit to get into this. So while the mainstream media is talking negatively about crypto, while your neighbor, the guy at the donut shop is telling you, everything wrong with Bitcoin crypto, guys, these same people have been saying the same thing since Bitcoin's inception, and it's still here. It's still here, right? Michael Saylor, CEO of MicroStrategy, they're preparing to buy more. I mean, guys, this Bitcoin's not going anywhere. Dylan Leclerc tweeted this: FTX funds are illiquid. If everyone withdrew their balance, they won't have enough to pay out their customers with the banks. Yeah, guys, so the fractional reserve banking system and what I think the FTX system exposes, guys, FTX is essentially a bank. FTX has nothing to do with crypto. They were an exchange. They were a regulated exchange that was above the rules. They had the SEC in their pocket. So this isn't what happened with FTX is not an indictment on Bitcoin and crypto. If anything, again, it strengthens the case for why we need Bitcoin. It strengthens the case why we need decentralized assets, because absolute power corrupts absolutely. When we give these institutions too much power, they do what the central banks do. They take your money, they lend it out. Your money, guys, whatever town you live in, whatever the biggest bank is, if everybody in your town went there to go withdraw their money, a bank run is what they call it, that money's not there. That money's lent out. Probably 3 to 4 to 5 times lent out, and they're earning yield on that money. What do they give you? Absolutely nothing. You know why? Because they don't have to. Because what the banks have is basically a regulated monopoly. All the banks work in unison with the federal government, and it's like, hey, there's no competition. It's not fair. It's not a fair market, and I understand that these are new concepts. This is just a system that we live in. and it's what we have to do because we have no say-so. We have no way of breaking out of it, but this is the truth, guys. Now, some bullish news, guys. Again, this is on Coinbase.com. You go read this for yourself, guys. Coinbase selected by BlackRock provide Aladdin clients access to crypto trading and custody via Coinbase Prime. The too long didn't read. Coinbase and BlackRock to create a new access points for institutional crypto adoption by connecting Coinbase Prime and Aladdin. Guys, this was posted in August. Coinbase and BlackRock. Again, you need to understand who BlackRock is. Go do your own research, but they have like $10 trillion of assets they manage. BlackRock is one of the largest institutions in the world. They have the most assets under management. And they're partnering with Coinbase to buy these digital assets. So do you think it's a coincidence that this partnership happens, the FTX stuff happens? Do you think that BlackRock wants to buy these assets at all-time highs? If you still think that the markets are controlled by a bunch of kids on Robinhood, a bunch of kids, trading crypto on apps, or retail investors, making YouTube videos, absolutely not, guys. These markets are controlled by big whales. These markets are controlled by big institutions that are working together. Coinbase has partnered with BlackRock, guys. Where do you think this is going? Think about it. Next story, guys. El Salvador to start buying 1 Bitcoin every day. El Salvador will reportedly begin buying 1 Bitcoin every day, according to the country's president, Nayib Bukele. As we know, guys, El Salvador's wanting to become like the Bitcoin hub of the world. And since El Salvador has adopted this Bitcoin standard, guys, their crime is down, their tourism is up, their GDP is up. You can look all this up. By every measurable metric, El Salvador is becoming a hub for freedom in the world by embracing decentralization and embracing these assets. Now, your mainstream media is going to tell you something else. Again, guys, only time will tell. Time will tell. But as they're buying the dip, as more and more players buy the dip, less Bitcoin out there. Finite supply. Scarcity creates value. Key lesson of economics, guys. Scarcity creates value. They're going to keep buying this dip. And now, guys, I want you to think about something. There's 21 million Bitcoin in circulation in total, right? 21 million Bitcoin total. How many millionaires are there in the world? Millionaires love investing in assets. We talked about that. Millionaires, why would they keep their money in cash that's being devalued by the day? Don't matter what country you're in. If it's a fiat currency, it's being devalued right now. If the U.S. dollar is being devalued, then every country is being devalued because we're the world reserve currency. So as these other currencies are being devalued, millionaires are going to find. Now, I'm not saying they're going all in on Bitcoin. I'm not saying that every rich person's going to buy, $10 million of Bitcoin. But if you were a millionaire, say you had a net worth of $10 million, and you knew you wouldn't buy 1 Bitcoin if it's $10,000 just to have exposure to the asset. I mean, you already got real estate, probably, if you have $10 million. You already got stocks. You already got bonds. You already got gold and silver. You already got real estate. You're not going to buy 1 Bitcoin? When every millionaire figures out, wait, there's not enough Bitcoin for all of us to buy, because I'm sure there's a lot more than 21 million millionaires in the world, because this is a worldwide asset. This is something completely new. And guys, you can look at, let's look at this next story. This will kind of further. Subway accepts Bitcoin so users can get a sandwich on the Lightning Network. So guys, Subways, check it out, guys. I'm not making this up. Subways are already doing trials to take Bitcoin. I've told y'all this, guys. I own an ATM company. I own a credit card processing company. In order for these institutions, Subway, to take Bitcoin, I don't know what country this is in, but it's in Berlin. In order for these institutions to take Bitcoin, it's really not that hard. It's really not that hard to set this up. It's really not that hard, and you're going to see a lot more than that. A lot more of this. McDonald's in like Sweden, I believe, is accepting Bitcoin. There's coffee shops all over the world accepting Bitcoin. So this is kind of the start, guys. It's going to slowly. Imagine in 5-10 years from now, do you think there's going to be more of this adoption or less? It's pretty simple. Now, probably the most bullish story, guys, Fidelity. Fidelity's who I trade stocks with. And guys, their main page, Fidelity, crypto is coming. Crypto decoded, Fidelity crypto. So understand, guys, trade commission free. Fidelity is one of the largest banks in the world. Fidelity is, I believe, the largest issuer of 401ks in the world. And they're going to be allowing their users to buy and sell Bitcoin in their 401ks, their retirement accounts. But these same people, the mainstream media is telling you the crypto's going to zero. Do you think Fidelity doesn't know what's going on? Do you think the largest banks in the world don't already know where this is going? Now, I don't know how this is going to tie in with these central bank digital currencies, guys. That's for another episode. But, guys, go look for yourself. BlackRock, Fidelity, the biggest institutions in the world, Subway, the biggest institution, McDonald's, the biggest institutions in the world are adopting this technology, are implementing this technology, and are telling you this technology is the future. So it's not that crazy to think. Now, a CNBC article, guys, the future of money, economists says the end of the crash is coming. Here's what could replace it. And guys, we've seen coin shortages. They've talked about coin shortages in this country. They're going to slowly want to phase out paper money. Now, again, guys, we have the central bank digital currencies and we have cryptocurrencies. These are two separate assets. Now, while central bank digital currencies technically are going to use blockchain technology, we want decentralized assets. But anyway, y'all, I'm Classic Abdu. If you made it this far in the video, thank you so much for real. Drop me a 100 emoji in the comments, guys. I hope I helped y'all get through this rough time that we're in. And again, guys, I'm going to keep covering it and keep letting y'all know what I'm doing. We're going to keep exposing the truth, guys. But anyway, y'all, thank you so much for watching. I'm out. Peace.